Hey guys, how's it going? It's Andy from MagooInvesting. Happy Tuesday. So far, as I'm recording this video, the market seemed like they're recovering a little bit. Stuff is up 1.5% to around 2%. Definitely nowhere near the 7% that we lost yesterday, but you know, a green day is always good in a time like this. In today's video, I wanted to talk about a type of stock that I think may be overlooked and may be one of the best deals in the stock market right now. Before we get started, I gotta say that I'm not a licensed financial advisor and I highly recommend talking to a professional, someone that can find you the best places to put your money going forward. In addition, I really appreciate if you hit that like and subscribe button, as would help my channel out a lot. Before we jump into this, I gotta say that this is all kind of speculation. I'm looking at sectors in the stock market that I think are being hit harder than they should be, and looking for places that I can find a fantastic opportunity. And I think I might have found that in a specific area of travel stocks. As coronavirus fears have kind of swept through the market, pretty much the entire stock market has been hit pretty hard. However, travel stocks have been hit particularly hard. You see stuff about a lot of airlines are having problems, they're canceling flights, and we've had a lot of problems with the overall travel because when you have a virus going around, people don't want to be in close contact with people. When you look at two of the largest airlines, American and United, you can see that their stock price is down 40% already so far this year. So they've been hit pretty hard. When I was doing research on this video, I saw stuff that Warren Buffett has been adding to his portfolio with airline stocks, and he says that they might be some of the best opportunities out there. He mentioned stuff like solid fundamentals and how low fuel prices are right now as being the reasons for him taking a position. However, he's been hit pretty hard in the past couple weeks. I saw that he took his position in February, or he added to his position in February, and since then the stock market has fallen pretty hard. Obviously, with a world-class investor like Warren Buffett, you kind of have to take notice about what he's doing. However, I see a lot of problems with the airlines, and that's not the sector of the travel industry that I'm looking at. Right now, I don't think that airlines are a fantastic bet. When you look at the entire history of airlines in the stock market, even during the best times, we're currently in the longest bull market in history. We're maybe coming out of that. But during that time, airlines have struggled to come back with very nice returns. They've been very choppy over the past couple years. When I put up this chart right now, it shows all of the airlines since 2000 and the mergers and bankruptcies that have been filed for each of them. And so we went from having around a dozen airlines in 2000 to now there's only a handful of them. And that's a lot of factors, including 9/11, the financial crisis of 2007, 2008. But you can see that during this time, even during periods when we've had fantastic economic growth, there's been a lot of bankruptcies and a lot of mergers. So I understand where Warren Buffett's coming from. He's one of the best investors of all time, but I am not with him on airlines being a good bet right now. If you're in the mindset right now that you think that coronavirus is going to go away in the next couple months and that the world economy will pick back up once the fears of that have gone away, I think I found a fantastic opportunity, and it's not one that's getting a lot of mention right now in the mainstream media. Stuff that I'm looking at right now are cruise ship stocks. Cruise ship stocks have been hit particularly hard in the past couple weeks. The main reason behind that is there have been a lot of news stories about coronavirus outbreaks taking place on cruise ships, and it makes a lot of sense. When you have a virus going around, with how many people are on cruise ships and the close proximity that they are, it makes sense why someone on a cruise ship brought it on there and it's getting spread around. There have been a lot of negative news stories affecting cruise ships and cruise stocks in the last couple weeks. Anytime you have an industry that's kind of associated with coronavirus, they're going to get hit particularly hard. When you look at the three major cruise stocks, you have Royal Caribbean, you have Norwegian, and you have Carnival Cruise. They've all been hit between 55 and 65% so far year to date. So when we talked about the airlines being down around 40% year to date, 55 to 65% is an incredible drop in just a couple weeks. In this video, I'm going to outline two pros and two cons of looking at cruise ships as being a fantastic opportunity if you think that coronavirus is going to go away in the upcoming months and you think the world economy is going to be all right. There is a lot of risk involved in trying to take a position relatively soon, and I don't think we're anywhere near finding a safe place to enter the market. So this is kind of looking forward, looking for fantastic opportunities and kind of having a trade set in mind so that when stuff does start to settle, you can take advantage of it. Pro number one to looking at cruise ships is that they're an incredible discount. I already mentioned that they're down around 65% year to date, when the rest of the market's down around 25 to 35%, and then travel stocks between 40 and 45%. So 55 to 65% is an incredible discount compared to the overall market. If you look pretty much anywhere, a lot of stocks are on discount, but nothing is at as much of a discount as cruise ships because of how negatively associated they've been with coronavirus. So they've fallen really fast. On this channel, I talk a lot about my criteria for taking a position. It has to be a company that I know and I trust. Cruise ships, I've never been on a cruise ship and I don't intend to. When I think of cruise ships, I think of Zack and Cody on Deck, the TV show. I think of videos of cruise ships going through canals and having them displace so much water that the shoreline recedes a little bit. Kind of cool stuff. But I've never been on a cruise and I don't really intend to. But it's a company that I've known. I know people that have been on cruises have really enjoyed it. And it seems like pretty common for people to enjoy taking their families on these exotic cruises. So it meets that criteria. The second one, it has to be hit by bad news. And this is, I think, maybe the best reason for why I think cruise ships are a fantastic opportunity. When I've talked a lot about companies on this channel, stuff like Boeing, it fell because it had a lot of news stories associated with the two major crashes and a lot of problems that stem from the company itself. When I talk about stuff like Twitter and McDonald's, Twitter fell because they had a bug in their ad system. It has nothing to do with how the company's being run. It was just someone made a mistake in their programming and they fixed it. And that's why they beat expectations on their earnings on last quarter. McDonald's, they had a scandal with their CEO, removed him. That has nothing to do with how the overall business is being run. It's just some bad news events that are associated with the company, but they don't have anything to do with the overall business model of the company. So looking at the cruise ship stocks, there's nothing wrong with cruise ships that are making them fall 65% this fast. It has to do with just the associations that it had with coronavirus so far. And so when coronavirus goes away, you assume that everything's going to be all right. If they can survive through this really tough spot, I think they're going to do fantastic in the future. Also, compared to some of the airlines, when you look at these cruise ships during times of fantastic economic growth, they have done incredibly well. Obviously, when you have companies that are kind of considered luxury goods, they're not going to do as well during recessions and stuff. But compared to the airlines, they've had fantastic returns in this longest bull market in history. And if you think that's going to continue and we're not going to see a recession in the upcoming months or year, this might be a fantastic opportunity. Now let's talk about con number one. This has to do with the overall economy and a potential recession. If you think that the market's going to continue to fall and we will see further slowing of the world economy and a potential recession, I think cruise ships are a no-go. As I previously mentioned, these cruise ships kind of go up and down with the market. When you see a recession, the cruise ships get hit particularly hard. They're called cyclical stocks, which mean that when the stock market does well, the stocks also do well. But it gets pulled down when the overall economy and the markets get pulled down, which is pretty common with a lot of companies. But if you think that the market's about to fall, there's a potential that these stocks are going to continue to fall further. But if you think that this is going to blow over in the next couple months, you can expect to see cruise ships kind of recover a lot more than other sectors, considering how far they've been knocked down. When I put up the overall price history for a company like Royal Caribbean, the reason I use them is because their stock has been around for a long time. You can see a lot of the dips coincide with a lot of problems with the economy. You see drops in 2000, 2001 because of the dot-com bubble bursting. You see drops in 2007, 2008 because of the financial crisis. And then you see drops in late 2015, early 2016 after Black Monday, which I mentioned in the last video. If you missed that, I'll throw that up right now, talking about the current state of the stock market and the world economies. So it's fallen pretty heavily during these times. But if you look at the overall chart, you can see how quickly they've recovered after the times of economic turmoil have ended. If you think the market's going to continue to fall further and we're going to enter a potential recession, cruise ships are a no-go for me. But if you think that things are going to improve over the next couple months and everything will go back to normal, cruise ships may be a fantastic opportunity. Pro number two is I think fundamentals for all of these cruise companies look pretty solid. I'm going to use Royal Caribbean again just because they have the longest amount of public data on them, so I'm going to use them for the rest of this video. First thing I'd like to talk about is the overall revenue. And when I put up the revenue chart, you can see that things have been very steady. Even during times of economic turmoil from 2007, 2008, from the financial crisis, you can see that revenue dropped a little bit, but quickly recovered right after that, which I think is a fantastic sign. Obviously, the stock price is going to fall pretty hard during those times, but the fact that their revenue doesn't drop that much during that makes me feel pretty good. When I look at yearly earnings per share, you can see how solid it's been overall. During times of poor economic periods, even the earnings per share for the year have been positive. So even when things are not going very well, revenue is still pretty good during these tough times and earnings per share is still positive. So even though the stock price is going to fall, I don't see that being shown in the fundamentals as being a big red flag compared to the stock price. Fundamentals look pretty solid for that. One of the first bad things that I see is long-term debt. With how large these cruise companies are and how expensive these boats are, it makes sense that they have a lot of long-term debt. The current estimate I saw is around $9 billion, which seems like a lot. However, when you put that into perspective, looking at the debt to equity ratio, which I think is a fantastic way of determining how significant long-term debt is for a company. If you have a company that has $500 million in long-term debt, but they have no equity in their company, it looks pretty bad. But when I look at Royal Caribbean, they're currently sitting around a 0.7, which I think is pretty solid. Overall, I really like looking at these ratios because it gives you a good understanding of kind of what the numbers mean overall for the company. You can look at long-term debt by itself and it does not look solid. But if you put that into perspective by looking at the equity in the company, it doesn't look as bad. That's kind of how I feel when I look at PE ratio, which is a good way to kind of determine how undervalued or overvalued a company is. When you look at the historical PE ratio for Royal Caribbean, it's been sitting between 10 and 15 since 2017. And now with this recent drop in the market, PE means price over earnings. Since the price has dropped so far, we're currently seeing a PE ratio of about 5, which is, compared to the historical records from the company, is really low. So that's kind of one of the reasons why I feel so bullish about cruise ships overall, is because PE ratio has fallen so far because the market has pushed the stock down 65%, which may mean that it is a fantastic deal right now. Finally, let's talk about con number 2, and that's the potential of bankruptcy for these companies. When you have stocks get hit so heavily in just a short amount of time, bankruptcy should be one of the first things that come to mind. So far, we've already seen this with a couple of travel companies. We had the British airline Flybe went under last Thursday, and recently we had a Japanese cruise ship company go under. I think based off of the financials that I've seen with these companies, I think they'll be all right. It's very unfortunate that some of these smaller companies are going under, but I think there's a good chance for the larger companies to survive and then thrive after this. I went onto a website that showed what their probability of these companies going under was, and I looked for Royal Caribbean and they had it at 48%. And when you see 48% for going bankrupt, I would not want to be anywhere near that. However, I don't think that the number is actually 48%. There's still so much uncertainty about the world economy, the status of coronavirus, that I think these numbers are using just the current estimates. And I think things are going to change really quickly. It may be better or worse for the company, but I think right now, seeing 50% for them to go bankrupt is not something I would base my future trades off of. I think things will be fine. And if coronavirus continues to worsen, there's a potential that they'll go bankrupt. That's why I'm really advocating for no one to take a position buying or selling right now until things start to settle. We know so little about the overall impact of coronavirus on the world economy, so making these decisions based off of speculation and companies kind of warning that it's going to affect them, we don't really know the total damage at this point. And so taking a position in cruise ships, I will not consider doing that until coronavirus has started to go away a little bit and we start getting some more certainty about the overall impact of the markets. So in this video, I presented 2 pros and 2 cons of taking a position in cruise ships. At this point, I feel pretty bullish on cruise ships overall. This is very dependent on how long coronavirus is around. If it's short-lived, maybe less than 3 months, I feel pretty good about taking a position after the dust starts to settle. If this continues to go on for more than a couple months, I expect to see at least some more bankruptcies in the travel sector, and that may be cruise ships, but we'll have to wait and see. So at this point, I wouldn't take a position until the dust starts to settle. We just don't know enough at this point. If you take a position right now, who knows if this is the bottom? You may be greatly rewarded if coronavirus starts to go away tomorrow, and you're going to make a lot of money. However, it does not seem like this is the bottom, just based off of the overall tension that we have with oil, coronavirus, and just the amount of panic that we're seeing in the overall market. So I think this is something that I'll have to revisit in a couple months, but I think this was a topic I wanted to get out because as we're starting to see these incredible drops in the market, this is when you need to start planning to take advantage of it in the future. We're nowhere near being at the right time to take a position. You just need to start planning things out so when the dust does start to settle, you can take advantage of it. So let me know what you thought about cruise ships overall. Do you think the market's going to continue to fall? And do you think that coronavirus is going to go away in the next couple months, or do you think it's going to be around here for a long time? Let me know in the comment section down below. Thanks for watching this video, and I'll see you in the next episode. Thanks for watching.